go to apologies of absence first, please.
Apologies for absence from Councillor David Simpson, Emma Woollett and Maria Battle.
Okay, are there any other apologies to present today? If not, we will move then to item 2, which is disclosures of personal and prejudicial interest. Are there any declarations anybody needs to make today for any items on the agenda? Sorry, Phil, was that your hand up or just adjusting your screen?
Sorry,
yep.
Just adjusting the screen.
No problem. That's fine. Okay. On then to item 3, the minutes of the previous meeting. I've not had any requests for amendments, but happy to take them if anybody has any today. If not, I'm happy to move them as a true record. Could I ask a seconder, please?
Happy to second, Chair.
Thank you. And all those in favour then? Good show. Thank you very much. Those are agreed. Announcements to the chair, I have none for this morning, so we'll move to public questions. Just check, have we received any questions submitted by the public for today's meeting?
No public questions, Leader.
Okay, and we'll move on then to item 6, which is the Swansea Bay City Deal Quarterly Portfolio Monitoring Report. So I think this is over to Phil, is it?
Yeah, thank you, Chair. So obviously the report is in the pack. I'll quickly cover over some of the key highlights, if you like, from the quarterly report. So starting off with the construction impact assessment. We've been completing a construction impact assessment for a period of time now. At the end of last year, we undertook an inflationary pressures paper, which was a point in time paper to just try and review where the portfolio was given the known issues within the construction sector, mainly inflation and obviously cost of construction works. That paper identified a forecast funding gap of up to around 31 million currently at the end of last year across the whole portfolio. So that's across the 1.25 billion of the portfolio. And what we've done now is we've combined these papers, and what they identify is that initial mitigations have been undertaken. Some elements of value engineering along with some additional funding has been provided from various sources. And that's ensured to date that there's been no reported loss of any benefits at programme, project and portfolio level. So the reason now for combining the reports is to provide regular updates on the construction landscape, and where required to escalate any issues through governance using the city deal change processes. So that's just a confirmation there of the point in time report and the fact that it's now been included within the regular reporting for the construction impact assessment. Moving on then to the portfolio highlights in the first quarter, or the last quarter of the last financial year, first quarter of this calendar year. We had 61 positive media mentions between January and March. We've been running at a lot of media mentions over the last few quarters, so that's fairly consistent with what we've seen in previous quarters. Twitter reach was 97,000, with followers creeping up to 1,562. Facebook reach was 11,000 post reach, with followers creeping up to just over the 1,000 mark. In the quarter, January to March, we had one new red issue. That was the appointment of the City Deal Replacement Finance Manager. However, since the end of the reporting period, there's been a successful activity to fill that post, and a new finance manager is due to start with the City Deal in early July. Moving on then to a benefits update for the portfolio. Investment at the end of the financial year initial outturn stands at around 271 million. That'll be confirmed in the next when we have the end of year financial report, the quarter 4 financial report. So that is an early indication, so that may be subject to some movement. And additionally, the jobs created to date are sitting at around 536. That's creeped up a little bit in the first quarter of the year, but we are expecting to see that number to rise more in Q1 and Q2 because we've had a number of projects now that have been operational for around 12 to 24 months, and that's the kind of time we'd expect to see operational jobs confirmed post-delivery, post-completion. Moving on then to just an overall summary of where the portfolio is. So we've got 3 of the 35 overall projects under the 9 headline programmes have now been complete. Their total investment sits at around 113 million. We've got 17 of the 35 projects in delivery on the ground, and their total investment will deliver 415 million of the overall portfolio investment target. We've got 15 of the 35 projects in completing pre-commencement activities, which is the remaining of City Deal investment. Just to point a note there, though, that throughout 23-24, we anticipate that around 410 to 420 million of that 710 million will commence. So again, a significant portion of that will be into delivery by the end of this financial year. Moving on then to a couple of highlights across the projects themselves. So the arena in Swansea passed its 12-month anniversary and had welcomed over 240,000 visitors in the first year of operation. And the Innovation Matrix, also part of the Digital District programme, commenced on site on the 6th of March this year. So that's 3 of the 4 now either complete or in delivery for that particular programme. Supporting innovation, low carbon growth. The Switch programme has now finalised the letter of intent with Swansea Uni, and following on from the end of the reporting period, has actually appointed a contractor, but because that's in early discussions with the contractor, that'll be made public in the next meeting. But again, it's a positive step forward. With regards to the air quality monitoring programme for projects for that programme, and a consultants called Ricardo Consultants have been appointed to support the reviewing of the data obtained to date on that particular project. HAPS, the Homes as Power Stations programme, have seen some significant progress throughout 22-23, with 187 new build homes being complete and 6 retrofit homes. In financial terms, that equates to around 41 million of public sector investment and 1.5 million of private sector investment. Pentrowell in Llanelli held a groundbreaking event also on the 6th of March. So again, another significant milestone in having Pentrowell commence delivery for the Zone 1 scheme. PDM back in I think it was March, it could have been April. No, it would have been March. The MEW, the Marine Energy Wales Conference, was held in the Swansea Arena. That had over 500 attendees, and that was the largest marine energy conference in the UK to date. So again, putting the spotlight on the region quite significantly by holding that within the region and heavily linked to one of the City Deal projects. The PDI project of completed piling activity for the pontoons and the timber pond infill is 85% complete. And the Port of Milford Haven also hosted an ESB and a Secretary of State visit in the quarter. Both were extremely successful and highlighted the potential long-term benefits of PDM's aspirations. And the final real point of note from the projects and programmes themselves this last quarter is that Digital Infrastructure have confirmed their private sector investment for the 21-22 financial year was substantially more than anticipated, delivering 14.5 million of their overall 16.5 million private sector investment target. So again, it's far surpassed what was expected for that year, and has gone a long way to meeting the minimum target required for that particular programme. So that's a kind of very high-level highlights of the report, Chair, but happy to take any queries or questions if there's anything on those or on the wider report.
No, thank you very much, Phil. I'll open it up to questions and comments in a second, but just from me in terms of reflection, I think again, a quarter showing really significant progress in terms of not just delivery on the ground, but delivery against those targets that were set for the projects. Just to say, in terms of the innovation build in Swansea on the Kingsway, visited that recently and really impressed with the progress being made. Then I think we're looking to have the topping out ceremony during the summer months, with occupation taking place early in the new year. And again, we're seeing a substantial amount of occupier interest for that building. So we're pretty confident that we'll be at full capacity in that building next year, so which will be a really great story, and again helps us in terms of making sure that we meet the aims that we set for, repopulating office space within the key city centres and town centres across the region. Great to hear the news on the digital targets as well. I mean, that's a substantial percentage of the target met this year, with just the updated report. So it's a really good progress. I don't know whether other colleagues or leaders wish to make any comments about the content of the report. Steve, do you want to come in there?
Yeah. Thanks, Chair. Thanks, Rob. Philip, excellent monitoring report, and it shows the extent of the work. I certainly echo all what Rob has said, and I also noticed that we know it's been dealt with and delivered in difficult times. Because we know through inflation and cost of materials. I brought this up when I first sat in this meeting, and I can see that you've certainly got it under control. And what I was very impressed with as well is the social media that you reached. But I wanted to ask, whilst reaching social media and general public, residents, etc., did you sort of monitor the feedback of what is happening for them to understand and in a positive way? I'm sure it would be, but sometimes we need to, you know what people are like out there, and Rob would certainly know it. Money better spent elsewhere, money better spent to do this or do that. I think it is important to capture the mood of our sort of constituents right across the region. So I just wondered, while you have all this in place and it's thousands and thousands engaged, what was the sort of monitoring feedback from the engagement for most of the projects? Because they are exceptional. So I great credit to you and your team and everybody else involved, not just in the monitoring, but the wider the delivery of all these projects, right across, as I said, the region. So that's all I wanted to ask on that. But thank you, Rob.
John, I saw your hand. Sorry,
Phil. I was going to say, did you want to respond to anything on the social media responses?
Yeah, happy to, but I saw John's hand pop up, so I don't know if John, you want to jump in there first.
Yeah, John. Two parts to the response. It's a really good point that you make, leader, and it's something I think we can probably improve upon. But we do monitor feedback from social media in particular, and what we've noticed is that there has been quite a turn of the tide in terms of people's responses and attitude towards many of the City Deal projects. They are now starting to see the positives of them, particularly when things start becoming a reality. And I think you mentioned, Rob, in your kind of question, and even with the arena and stuff around the Kingsway, we're seeing a lot of positivity around those and other things as well. So, but I think we can do more in terms of monitoring and getting that feedback in a more formal setting to analyse it, as opposed to the kind of anecdotal of it sounds more positive than what it was previously. So I hope that partly answers your question, but I'll work with Heidi, our marketing comms officer, with all the key stakeholders to look at how we can take that forward and get more rich information on that.
Okay, thanks, Jonathan. And yes, I think just before I bring Darren in, I think it's a important point around the public reaction to this, because it is easy to forget. In 2017, when we signed this deal, it was on the basis that we had to invest as local authorities alongside the two governments, alongside the private sector and partners. There's no such thing as free money in government. So it is a contract. It is a a set of arrangements which means co-investment taking place. And again, people will have seen some nonsense being perpetrated in other parties around the fact that it's a redirection of funds that could be spent elsewhere, or the City Deal money could be used differently for different purposes. Now, we all understand why people who are not close to the arrangements might think that, but this is extra money that we've secured from the government. It's extra money from the from the private sector that would otherwise potentially have been invested elsewhere in the UK, and we would have lost it in this region. So, you know, this is not about redirection of funds. It's about securing additional funds from other parties and making sure we deploy them to make the sort of changes we want to see in our economy. So, yeah, thank you for that, Steve, and thank you for the response, John. Darren?
Yeah, thanks, Jim. Yeah, I echo what's been said. It's good to see the progress that's been made now on a number of projects across the region, and likewise to you, we're really pleased in Carmarthenshire to see the progress in terms of Pentrewell. Now we've got contractors on site, and I think it makes a massive difference when people can see work actually happening in front of their eyes. It makes a massive difference in terms of bringing that to reality. So hopefully in time the public perception will improve even further when they see the delivery, not just of buildings and whatnot, but actually in terms of jobs and opportunities for local people. So it's great to see those local projects being delivered, and we're all playing our part in that. There's one question I've got in terms of the quarterly monitoring report there, in terms of the homes as power stations project. Clearly that's a regional one where we've all got an interest. I'm just wondering, we have had presentations in the past in terms of specific projects to the Joint Committee here, whether it's appropriate or timely to have an update from the Homes as Power Stations team. I know we discussed around 6 months ago the issues around staffing, to support the project. I know there's been a lot of progress in the last couple of months in terms of trying to push that forward. So from my perspective, I'd be grateful really if you could have an update, whether it's formally to this Joint Committee or whether we have a briefing to leaders. I'm pretty relaxed about it, but I think it's really important that we get an update to see where we are on that front. Just a request, Diolch.
Yeah, absolutely, Darren. I think it's important that we do continue that regular focus or deep dive into the project, as well as receiving the general progress update. So yeah, if we could take an action, if everybody's happy, that we'll agenda the HAPS update for our next meeting, if that's okay. Chris, come to you next.
Thank you, Chair. Just a quick question, Phil. I was wondering, has there been any synergies identified between the Freeport and City Deal projects? And if so, we should give maybe a bit of consideration how to inform the public about that. So as part of the social media engagement, to explain what it means for the region and for the City Deal. I'm being asked quite a few questions around that.
Yeah, absolutely. John, do you want to jump in there again? I can give an answer, but I won't articulate it probably quite as well as you. So I'll leave you pick that one up.
Yeah, in the run up to the announcement, I did a podcast to Business News Wales talking about the synergies with City Deal and Freeport, so that is out in the public domain. But Chris, to further that, yes, we can take it further forward. We got 2 senior responsible officers, being Stephen Jones and Nicola Pearce, from 2 local authorities who are overseeing City Deal projects and are keyed in very much to the Freeports. But we can make sure that is at least capitalised on, and because City Deal has catalysed part of that Freeport bid. So yeah, absolutely, we can take that forward.
Okay, Karen, did you want to come in?
Yes, if I can, please, Chair, just to add to what Jonathan has said, really, and in response to what Chris has raised there. Within the Corporate Joint Committee, of course, we have the economic development and the energy work streams. So the plan is to have a workshop in June where we'll be taking stock of the interconnections between all these strands of work. So I'm sure, as well as promoting the synergies between the City Deal projects and the Freeport, we'll have an opportunity through the Corporate Joint Committee as well to do similarly. And we've been speaking with Chris about developing the private sector input into that in line with the decisions that leaders have taken within those arrangements. So it's just a bit of additional information, Chair, that hopefully will be helpful to Chris on this particular point.
Yeah, thank you, Karen. Thank you, John. And I think, look, the city deal doesn't operate in isolation. The free ports can't operate in isolation. We've got the CJC structures Karen's identified. I think it's important that we do make sure that our comms and our communications are linked up and aligned, so that we're maximising the narrative that we've got in the region in terms of all of the projects, all of the investment, all of the potential that is going on. So again, perhaps we can pick that up in the workshop, Karen, in terms of how we sort of pull all of the strands together to make sure we are having the biggest impact we can. Okay. So if there aren't any more questions or comments on this item, this one we will need to go to the vote for. So if I could ask colleagues to show their approval for the report before you. Thank you very much. That's agreed. Okay, so we'll move next to item 7, which is the allocation of £5.3 million of funding into the Supporting Innovation, Low Carbon Growth and Advanced Manufacturing Production Facility project. So who's taking this item, please?
It's myself, John.
John, over to you.
Thanks, Rob. And I will bring in key partners on this as well, because this is summarising on behalf of Neath Talbot Council. But this is to formally ask Joint Committee to approve the updating of one of our programmes, which is Supporting Innovation, Low Carbon Growth. They have a current business case, and what they would like to do is enhance the existing project within it, called the Advanced Manufacturing Production Facility, AMPF, with the inclusion of a national net zero skills centre of excellence. So this is a consequence of the removal of some projects in 2019, things around Centre of Excellence for Next Generation Services, CENS as everybody called it, Factories of the Future and Steel Sciences, which were all led by Neath Talbot Council. And then subsequently we had, through our Governance Support Innovation Low Carbon Growth Programme, and that was incorporated into the programme portfolio, and approved by both governments in March 2021. And consequently of that change that happened between 2019 and 2021, there was 5.3 million of the 241 million City Deal funds, which remained unallocated to a portfolio project or programme. So subsequently, Neath Talbot Council have raised the prospect of amending their existing business case with the Portfolio Office, and they're seeking, well, we're seeking 3 things from the Joint Committee today. First is the approval of the 5.3 unallocated City Deal funds in principle to Neath Talbot Council for the purposes outlined in Appendix A, which I'll cover in a second. The second one is to request that Neath Talbot Council formally proceed with the development of their business case to include the Enhanced Advanced Manufacturing Production Facility with the training facilities. And then the third one is to approve the business case proceedings and the business case approval, and that's outlined in Appendix B, which I'll cover off as well. So those are the 3 things we're asking for today. So if I refer to Appendix A, this is effectively an outline of the Enhanced Advanced Manufacturing Production Facility amendment. So as I said, it's the £5.3 million of City Deal funds that will be used to enhance the Advanced Manufacturing Production Facility within the low carbon programme led by Neath Talbot. There will be additional benefits for the 5.3 million allocation. And Neath Talbot will deliver a physical output, which will be a national centre of excellence for net zero skills by 2026. This will include lots of things, but industry-led hybrid facility offering specialist facilities, particularly to commercialise R&D and innovation, provide like a proof of concept, if you like, for factory development, advanced manufacturing. That is supported by industry-led skills provision and complemented by both further education and higher education provision across the region. So the Centre of Excellence for Net Zero Skills is aligned to many strategies, UK, Wales and regional local policies and strategies. Stronger, Fairer, Greener Wales, for example. Neath Talbot Council's DARE, which is Decarbonisation and Renewable Energy Strategy. Our South West Wales Regional Economic Delivery Plan, and also Welsh Government's Manufacturing Action Plan. There are many more, but those are some of the key ones. So what will the initiative do? Well, it's going to help reduce the skills gap and support industry to accelerate innovation through technology. And in doing so, it will provide access to lots of high quality, cutting edge equipment, systems, software, in a state-of-the-art facility. The training, which is really important, will be high quality. It will be tailored around the needs of learners and industry. Experts from industry and academia will lead and support those involved in this facility. And what's key is, because we already have the advanced manufacturing production facility approved, the deliverables for this enhanced part of it are very distinct. And it also doesn't, it complements, it doesn't overlap our existing skills and talent program deliverables. So in other words, there's no duplication. This is all in addition. So key indicators are shown in a green table on page 2 of the report. But it could be stuff around the size of the premises, the jobs accommodated and created, investment, gross value added uplift, and training deliverables are all summarised in that table in the report. Partners are vital to the successful delivery of this. So Neath Talbot Council have already started engagements with local authorities, further education, higher education, Industry Wales, Net Zero Industry Wales, and the Regional Learning Skills Partnership. But also, again, critical to the success of it is local industry partners. So that engagement has already started in early stages, pre-business case development. So timescales are also critical for us as a portfolio. So the design and build process will commence around June, subject to approval today. That's going to take around about a year, 12 months. And then construction should commence approximately July 24, and then completed by early 26. And in parallel with that, a procurement exercise will also take place to identify an appropriate partner or operator for the facility. So that's a kind of synopsis of Appendix A. Appendix B summarises in a very succinct way the key milestones and requirements for the business case update and the approval process, noting that we will be Green Book compliant following UK government's guidance, that we will go through the approval process through the region and the business case development, and also through the change control process that we have for the city deal. So that just summarises the key aspects. And we're hoping, and Karen, you may want to jump in here just to confirm, we're hoping that will come to probably November's joint committee, because we've got a bit of a gap in the summer period to get that approved by the region. And Chair, in summary, that's everything I wanted to cover. And the only further point is what you have in front of you now, the proposal and the approval process, that was endorsed by Programme Board on the 18th of April to support Joint Committee with their decision. Okay.
Thank you, John. That's really helpful run through and very clear. Karen, is there anything you wanted to add?
I don't think so, Chair. I think Jonathan's given you quite a detailed summary there of the papers that are in front of you, and we have had further discussions outside of the meeting today as well, where I know we were able to clarify a number of points. Just on the point of the timing of bringing it back, John, I think if Nicola's given you a November date, then I've got no reason to question whether, that shouldn't be possible. So I think we should work on that basis. And if for some reason that proves to be a problem, we will report that back.
Okay, thank you very much. Chris, bring you in next.
Thank you, Chair. Yeah, I just wanted to say that I fully support this proposal because it's not only timely, it's in big demand. And I think there's many businesses that are already actually operating in the area or looking to establish something similar to this. So I think timing's very good and it will attract a lot of industry partners. So I just wanted to lend my support to it.
Yeah, thank you, Chris. Appreciate that. Jonathan?
It's probably worth me highlighting the Economic Strategy Board, as part of the approval process, there's a test and challenge milestone. We've put it to Neath Talbot, Chris, that they could have an early stage engagement with the SB and then a kind of test and challenge once the business case is more up to date. So that's with them, but we'll engage with ESB board members to get that engagement happening throughout that approval process.
Okay, thank you very much. I think that's sensible to get that early engagement and advice from ESB. Sounds a really, really positive set of proposals. It's in line with our principles in terms of reallocation of funds and reinvestment of funds. So you have the 3 recommendations there in the report. If there aren't any further comments or questions, if I could ask fellow leaders if they are in support of the proposal, please. Thank you very much. That's carried. Thank you, colleagues. And again, thank you for that report. On to item 8 then, which is an update on the private sector investment contribution report. This one's just for information, but I'll go over to, is it Peter for this item or Phil? Who's leading on this one?
No, I'm going to take this one, Chair. So thank
Peter,
you
over to
very
you.
much. Hopefully you can hear and see me okay. The internet's a bit wobbly over here in West Wales this morning. Yes, so before you have a report which has been prepared to address the portfolio red risk against the achievement of private sector contribution across the portfolio. And it details what type of contribution is expected for each programme and project and when it is expected to be achieved. The private sector contribution until now has been highlighted as a portfolio red risk due to the uncertainty and impact that it has on successful delivery of the portfolio, and that most of the contribution is forecasted for the later phases of the portfolio timeline. Over the lifespan of the portfolio, the achievement of private sector contribution is expected to increase as the projects establish and move into delivery and operation, which is where we see ourselves at the moment. And the main realisation point is expected to be from 2025 onwards for the whole of the portfolio, really. So, given the progress that we've detailed in the report, in the office where we think it may now be prudent to reduce the risk to an amber, given the confidence of the delivery organisations in delivering what they have targeted and forecasted. We're using the term contribution across the report because it best describes the variety of ways that the private sector may part fund City Deal programmes and projects. So the original business case for the City Deal forecasted a total of circa 1.3 billion investment, of which 625 million was contributed from the private sector. The total City Deal investment from all sources was 271 million at the end of the financial year 22-23, of which circa 28 million was private sector investment. So quite a lot of progress has been made over the last financial year. And I think the interesting thing to note, and a very positive message, is that the current private sector investment forecast indicate around about a 13 million increase over the original portfolio target, which is now looking at circa 638 million. So of note, we've already heard about the digital infrastructure programme reporting a 14.5 million return on investment. The Pembroke Dock Marine project has secured 13.9 million from the Port Authority. The Skills and Talent Initiative is actually one of note as an exemplar because they have overachieved so far. Their contribution was based on apprenticeships, and they're on target with that at circa 500,000 to date. But as part of their extra activity and the creation of the pilot projects that they're running, they're demonstrating a projected 390,000 of in-kind and 35,000 of financial contributions, which is over and above what was anticipated in the business case. So that's very positive news, I think, from the skills project. We also have the £1 million contribution from ATG for Swansea Arena, which has already been reported. And from the HAPS project, circa 1.4 million of private sector costs. So it's started to look quite positive across the portfolio now. The project teams remain confident that the private sector contribution remains viable and achievable over the portfolio duration. And the level and nature of contributions are now included as part of the quarterly monitoring process that we undertake to make sure that we're on track and to pick up any extra extracurricular activities that are bringing in investment, shall we say, over what was originally anticipated. So happy to take questions if there are any from members.
Yeah, thank you, Peter. And again, a really positive report with some good progress being made. I think also it's important that we remember the profiling that we adopted at the start of this process way back in 2017, because it was always the case that the City deal was there to help us diversify the economy, but also to deal with market failure. And it was about the public sector investing first on the basis that the private sector would then come in behind. And of course, often you cannot appoint your private sector partners until you have made certain decisions, gone through procurements. So there is always a lag with that private sector investment, but good to see that coming online now and, in essence, allowing us to potentially reduce that red risk down, as you say, to amber and to a more manageable risk, and therefore have a really strong story to tell in terms of that pipeline of private sector investment coming in. One other point I'd make is, of course, we're managing the private sector match investment for the City deal as it's currently scoped. But if I look at Swansea City Centre as an example, obviously, because I know that better than other areas, there is a significant influx now of private sector investment in the fabric of the city on the back of the City deal that we don't capture within the City deal. They are complementary and additional investments, investors coming in, buying up buildings, regenerating sites on the back of the public sector investment in the city centre. So I think I absolutely agree with the report, but I think there is also those additional benefits that we're not currently capturing. It's something I've said to my teams in Swansea. That is part of the success story of what the deal does, because it does then allow us to move from a position of market failure in a position where we've got a viable investable region and a viable and investable city. So just to add that to what you said, Peter, but other than that, really, really pleased with the report. I don't know if any colleagues wish to make any comments. Steve, first, please.
Yeah, just very briefly, Rob. Thanks for that. Thanks for that, Peter. And I was going to mention what you did, Rob, there with the private investment and the knock-on effects. Especially if you're able to match fund. But I just wondered, from your experience and expertise, Peter, in relationship to the private sector, we seem to be we need to have private investment in everything that we do. Wherever we are, wherever we are in Wales, every local authority will have projects that are perhaps outside of our sort of areas of the CJCs and so forth, and the City deal. I just wondered, interest rates again was announced going up today, and the cost of living crisis, inflation. I just wondered, where's this private investment continuing to be strong and coming from? Do you have a look at, or do you monitor the way the private investment is working in general to see if there is going to be some sort of dip where they are starting to look at possibly not giving that investment, because it's the private investment that we really rely on, really, don't we, for a lot of what we do. So it's just wondering, is what's gone on have affected the overall private investment in our region? Thank you, Rob.
Thank you, Steve. Peter, do you want to respond to that?
No, thank you. I mean, I'm going to perhaps defer this to Chris in a second, because it's more his area of expertise. But I think the general feeling is that the investment arena is quite buoyant at the moment, and I think that what we need to do, and this may well fall into the realm of the CJC, perhaps, because I know you're talking in a wider context here. We might need to be looking at a more progressive approach to inward investment, and developing a regional portfolio of opportunity in a format that is palatable to the investment market. So they need to understand what the opportunities are within the region and how they can interact with us as a public sector to achieve our ambitions with the regional strategies and things like that. But perhaps if I could defer that across to Chris as more your area of expertise.
Yeah, certainly. So Chris, just before I bring you in, one point I was going to make in response to Steve's point is, obviously there's been a lot of volatility and turmoil in the national situation in terms of some of the budgetary impact, some of the Brexit impacts and other stuff, which obviously don't just affect the city deal, they affect the whole country. So we've got those headwinds that everybody's having to deal with. I think the clear thing that we've had in a number of reports that have brought to us over the years is, for our region, the clear thing was you need the public sector in there, because if you didn't have the public sector element, you would potentially lose your private sector ability to invest. They need that confidence and co-investment. But I'm sure Chris can give a much more detailed, updated picture.
Yes, and it's a really, really good question. I mean, I was actually talking to a fund manager yesterday about the appetite for investing alongside public bodies. So a company that's out raising funds to do exactly this. So with the short-term interest rates going up, it highlights that there's more risk in the system, but long-term rates aren't moving as much. So what we're looking to attract here are things like patient capital, so long-term investment where they still have a high internal rate of return, but over a longer period of time. So city deal projects, just based on their nature, are longer term. So in fact, it becomes more attractive for institutional investors to invest alongside a local authority in a high risk environment. But what will be interesting, and this is some of the work we have to do, is to look at the type of investments, so where they can get that higher rate of return. So it's not just maybe loan or debt, it's around some equity and taking a bit more risk to get some higher return. So yes, I think it is changes the landscape when the interest rates go up and the economy goes down, but the money that we'll be attracting is more longer duration, so it's not going anywhere, and there's a lot of it at the moment. So there's a lot of funds being raised looking for opportunities.
Okay, thank you, Chris. John?
There was one thing, but I'll cover off the question as well from Councillor Hunt. So, you know, when we've had certain initiatives, particularly Pembroke Dock Marine, you know, there are lots of interest from companies for lots of reasons, Freeport's being behind the city deal, but even local to yourself, Councillor, the property development fund in supporting innovation, low carbon growth, that was oversubscribed, and that was from businesses wanting to build and locate within the borough. So there are lots of examples of that, and even from a tenancy perspective, we're seeing a lot of interest in properties like the Henner Annexes and Pembroke Dock Marine, the Kingsway. I was talking to Rob about this recently. You know, there's a lot of interest in private sector companies wanting tenancy, the Bay Technology Centre, and the list goes on. So we're seeing there's no slow up, if you like, of business interest to invest, as Chris just said, and to co-locate within our region. So that's a positive thing. So that's part of the response. And then the other part is in response to what Rob said, the wider impact of what City Deals catalysed. We are due a portfolio evaluation. We said we would do one. So I think that could be captured in that, Chair, and how we evaluate the wider impacts. We know what the direct consequences are, but I think we need to look in a wider context. So that will be part of that remit that we'll have going forward in coming months.
Thank you, John. That's really helpful. And again, just to share with the committee and more widely, when I say we, myself and some of my colleagues from Swansea Council and Chris and others from the region will be in Leeds next week for the UK Reef conference, where we'll be meeting with potential investors and other parties who potentially could bring investment and development within the region. I think what we need to do, given that we've got two free ports in the region, we've got a successful city deal, we've got the new CJC structure, we'll shortly have an expanded ESB, and Karen, I need to catch up with you in terms of where we are on that. We now need to make sure that we've got a diary of places where we will have a presence as a region, so that we maximize the opportunities for private sector investment in our region. And again, I know leaders will take an opportunity to have that discussion in due course, but I think it's really important that we are visible and available at some of the key events so that we do maximise that potential. Okay, thank you very much for that, Peter. That one was for noting, I believe. So we'll go back now to the final item, which is the forward work programme. So who's taking us through this one, please? John?
Myself, Rob, yeah. So Joint Committee Forward Work Plan, this is your 6-monthly rolling update. It's covering aspects around governance, marketing, communications, legal and finance. So it's fairly self-explanatory. It's just moving forward 6 months across those themed areas. And it just provides you indications as to when and what will be coming through Joint Committee. So it is for approval, Chair, unless anybody has any amendments or any questions on it. It is what it is.
Yeah, thank you, John. Again, very clear. So I open it up if anybody's got any questions or comments on this. If not, could I ask colleagues to show their approval for item 9? Thank you very much. That's agreed. And just before then we close, can I just pause for a second to recognise Phil Ryder. Phil has been successful in securing a new post in a new location, which is, as he said, a good opportunity for him. Unfortunately, a bit of a loss for us because obviously we wouldn't want to see Phil go. But can I just, on behalf of the committee and colleagues, thank you, Phil, for the work that you've done on the deal and for the contribution you've made to the delivery of the deal, and wish you every success for the future in your new role.
Thank you, Chair. It's been an absolute pleasure.
No problem at all. Okay, and with that, colleagues, our next meeting, can I just go to Democratic Service Officer just to highlight when our next meeting is? Apologies, I don't have it before me.
Yeah, it's on the 27th of July at 2:30. It's in the afternoon rather than the morning.
Okay, I know colleagues will be catching up before then more informally, but look forward to seeing you all in July. Take care. Thank you very much for your attendance. Declare the meeting closed.
Thanks, Rob.
Thank you.
Thanks very much.
Bye-bye.
Ta-ra.
Bye-bye.